Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on September the 7th for a Forex trading and cryptocurrency trading analysis for you for September 7th through September 10th. And before we get into it, we just want to pull up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. If you have not done so, please check out the book High Probable Japanese Candlestick Patterns on Amazon.com in paperback and Kindle versions written by yours truly. And also don't forget to subscribe to our YouTube and Twitch channel, whichever way you're viewing us, if you have not done so, and also like and share it with your trading friends out there. All right, without any further ado, let's get to our live screen. We have the Forex-Trading-Unlocked.com website pulled up. Let's skip past the numbers of the day. Unemployment was a big number on Friday. We have oil numbers on Wednesday. We have unemployment claims on Thursday, which will be big. The key thing is looking and seeing how the dollar had bounced on Thursday of last week. And then, excuse me, on Thursday of last week. And then yesterday we had a little rebound. Remember, even though the U.S. markets were closed, the currency markets were not closed. So a little bit positive trading for the U.S. dollar to start the week off. And also we have some follow through going through today. So let's see what's going on. We have some interesting things shaping up in both the Forex and the cryptocurrency markets. Euro US dollar, is hanging just a little bit off the lows of the day. It's correcting back, as you can see, from Friday into today's trade. We are trending lower on the hourly basis. It is a nice little swing trade. It's nothing very violent. In the past couple hours, we've definitely seen a little bit more of a battering of resistance than we have of support, of support than we have of resistance. And right now, it looks like the dollar bulls are starting to gain a little bit more momentum. We have some interesting things shaping up around the globe. I think one of the reasons why you've seen this extra runoff in the dollar that ran into last Friday in unemployment was because you had currencies, especially such as Australian dollar and New Zealand dollar, that had been coming back strongly in a correction against the dollar. If you look at the European currencies, they didn't have quite the volatility or movement or stuff going on that was happening with the lesser currencies such as those. So I think that put the strain on the dollar index, pushing this extreme. And as you can see now, we came into heavy resistance. We set this nice little bottom in the Euro US dollar. The question is will we fall back on support, or will we challenge resistance again? So our last swing high here around $1.1906 is a key breakout level. Below here, I think you have it's not just an aggressive short position, you have a high probable short position staying below this downward trending resistance line here. It's most likely the dollar is going to remain a little bit firm over the next couple sessions as we trade into this first week of September. Can you believe it? Summer's over. We are now in the fall. If you notice the slope of this trend for the euro, it was quite extreme. And today we are falling right on that little level right there. We bounced off of key support. I would definitely watch today's low of the day. Any trading below there confirms weakness, where the Euro US dollar should settle down more into this below $1.18 area, into the upper $1.17 area, as we figure out whether we are going to be a neutral trade, or if we are going to resume the bear trade, or if we are going to eventually see some really big, strong dollar weakness. In lieu of everything that's happened in the U.S. and the actions around the globe, you would think that dollar weakness would prevail. However, with lockdowns being imposed in Australia, New Zealand, Singapore, and all across the world now in a very heightened fashion, the lesser currencies are going to start to run out of gas, meaning that dollar strength is going to be hard to fight. All right, let's look at the British pound US dollar. Here's another one that we have a nice aggressive little sell-off going on, a little bit harsher than anything that's going on in the euro. Interestingly enough, though, is that this correction here for the pound is coming off of a higher move low, not a lower move low like the euro. So the euro right now is coming to the end of an upside correction and an overall bear trend. The British pound US dollar is coming off of an upside correction in a neutral trade. So we're coming off a lower move low here. We set a lower move high. This has us going sideways. As far as European currencies are concerned, unless you see a huge sell-off in oil, which is not in the future right now, as far as our analysis and expectations are concerned. I don't think you're gonna see a heavy sell-off in the pound. A lot of this churning right here, I think, that you've seen over the past two sessions of over the Labor Day holiday into today, is the aftermath of profit taking from Friday's blow-off rally. I would use caution selling into this slide here, just because of the fact that we are not trending. We have confirmed a neutral bias for the pound. We had a higher move low and a lower move high after a lower move low and a lower move high. So we are really in limbo. A breakout of $1.3894 would have us definitely on the bullish path, looking for higher move highs. Right now, we are really restrictive. We think this downward sloping resistance line here is going to help keep us wedging at least into the next few sessions. We'll see how we come into Wednesdays and Thursdays numbers. Can't believe it's already Tuesday. Being in America, it's already it feels like Monday, but it's actually Tuesday morning, almost lunchtime already. So we're pushing already the midweek. I think we'll know where our stance really comes as we get through the oil numbers on Wednesday and definitely the unemployment claims on Friday. Something you need to be very cognizant of is the fact that unemployment did not come out the way that the pundits and the media and the government was hoping things would be. The realities of things are really shaping up as far as where jobs are being filled, where they are falling apart, and the fact that as people are coming back online for many jobs that are still available, and obviously there's places thriving for employees, there's other businesses that are shuttering. And that the question is which number is greater, the people returning to the workforce or the people who are winding down in places that now they have to go and find a new position somewhere else. Hopefully those that are working now that are in those situations are going to rebound quickly. Most likely that would be the best scenario for the economy and for all concerned. If they go into limbo and start hanging out on unemployment, and now this seems like they're going to give another extension, well then unemployment is not going to go down, it's going to stay flat to going higher, and that is not going to bode well for the markets. We shall see a lot of swinging around, and the volatility, I think, for fourth quarter should be much higher than it's been over the past couple months. The summer's been kind of calm. Everyone was given this administration, this government, time to settle in. The failure rate right now is off the charts. No one is looking for anything good to happen right now, and especially since we are on the eve of September 11th, we don't know how any of this is going to shape up, and it seems like the terror alerts are going up also. So between pandemic, terror alerts, fear is the push that all governments and media are pushing, and if that happens, volatility is sure to be here. So let's see how this pans out. Right now, stay on the short side with the British pound US dollar. We're looking for a test of lower move lows and support. Only if we get above $1.3894 do we come off this bearish campaign. This would prove a higher move high after a higher move low. The short-term daily trend is bullish, but the intermediate trend is definitely neutral, and neutral to bearish. So it's a tough chop. I would be very cautious. We had this buy signal here. We've come up into the resistance area. If this is going to be capped, and we are in a neutral to lower trade, this high is good for a while, and I would expect support to get tested at least down in this $1.37 area. Something you can really key off of too is this swing low here. If we fall below $1.3681, that confirms either excessive dollar strength or excessive pound weakness. The British pound versus most currencies is very strong. It's only come back versus the Australian dollar and a couple other ones that they've had a big rebound over the last week. As a whole, the pound is pretty firm versus many currencies. That is what gives the pound the ability to be neutral. If we start to see weakness in the pound versus other currencies, which I do not see unless we have a big sell-off in oil, then that would change the direction, and then we could become bearish the British pound. But we would need a big sell-off in oil for that to happen, because then that would probably precipitate weakness in the pound versus other currency crosses, which would in turn also propel the pound US dollar bears towards lower levels in a big way. But that would be only in the case of a big major turn in the price of oil. I don't see that happening anytime soon, especially with the Taliban kicking up its heels right now. U.S. dollar Swiss, here's another reason to be bullish. The dollar, in the midst of this trying to churn around the euro and the pound, the two biggest weights in the dollar index, that didn't happen. So, and the U.S. dollar Swiss didn't get beaten down too much. Irony of it all is today has a lot of solid trading and volume with a big pressure on resistance in the Swiss. When this happens, that shows that there is this divergence, once again, that's going on in the European currencies, but it also shows where dollar strength is. The flight to quality of the European currencies is and always has been the Swiss. The pound and the euro have their strengths and weaknesses, like as all crosses do. However, this is usually our flight to quality, and the fact that the U.S. dollar Swiss continues to hold support and make a run at resistance has us slanted towards looking for a breakout into the upside. I think right now you're in the middle of this chop. If you are a bull, 90.99, so basically 91 cents is your threshold for any failure. If you're below here, that confirms lower move lows. You're on the wrong side of the trade. You do not want to be long going into any falling market below here. If we break out of 92.42, well, let me tell you something. Odds are you're going to see a lot of buying momentum, and we should get a good pop up to around 93 even. Am I looking for any extent of huge move, like something like here and starting at 92 and bringing us up to like 94, 95? Anything can happen. I do not see that kind of lift in the market coming up with this sort of a trend emerging, but I can see a grind higher as the U.S. dollar, even as bearish as most of the world and the pundits are, guess what? The world's falling apart, and no matter what, everybody wants to use U.S. dollars because they take them everywhere. All right, now let's go to the U.S. dollar JPY. Just for transparency, we let you know we are long the U.S. dollar Swiss. We're also long the U.S. dollar Japanese yen. This one is also in a similar situation. It is also the flight to quality of the Asian basket of currencies. We'll take a look at the others as we get through this one. This is in a similar situation, except for the fact that this has been in a long-term bull now for a while. It's only been in the short-term neutral trade for the summertime as it has corrected down, coming down onto good support, bottoming in this area. If we were to see the bears come out of nowhere in the U.S. dollar yen, even if we start to sell off sharply, I don't see anything getting much lower than this prior low here of 108.73. I think 108.5 down to 108 even is a really, really strong area of support. Like 107.5 is almost like the major line in the sand. It would have to get below there to even remotely see that the U.S. dollar yen trade is not only in a bear market, but looking to test more support. Because right now we have a longer term view of seeing the U.S. dollar yen challenge resistance, take out this high here to 111.70 area, and rally up to 112.5 to 113 even in the short run. We have 114.5 to 116 even as longer term targets before this year is out. So if we spread out this chart, and if you even see how this trend is emerging here, this would be a great 45. And if you see this right here, let's just say that this becomes a great baseline for the trend going higher into the future. Here's December 31st. Let's put a vertical line here so it gets really clear. Let's move this. Move this all the way. There we go. Okay, so you can see this. All right, we got to tighten down now here. So here's December 31st, the end of the year as we cross 2021 into 2022. If we were to maintain this slope, let's say we get a nice breakout to the upside here and start waffling around here, we could easily chop around into October, November, not even taking out this high, and come up and buffer up around end of October, beginning of November, and we'd be trading at around a 111.5. Not that big of a jump, but we could digest and rally slowly up into this area, bounce up again, and continue. If we go along that line, let's go on the monthly basis or weekly basis. See, as we get into the weekly basis, you can see here's 112. We start to rally up. If we were to see a rally something like this occur from where we are right now, you look at a balance here, here's 107 to 111. There's a $4 rally. We're at 111, just under 111 right now. We're here 110. Let's go 110 half. $4 rally that puts us at 114 half. So that's where we're looking at the extensions for us to go as far as longer term when it comes to the Japanese yen. So obviously we're very bullish US dollar yen, and this is regardless of whether or not the dollar becomes a solid bull versus all currency crosses, or the dollar becomes a bear. You know, right now the trend is your friend. The US dollar yen, the only thing that I could see that would really put a big turn in the US dollar yen would be, one, the BOJ, the Bank of Japan, would have to start raising interest rates. Good luck with that one. Oil would have to tank below $50 a barrel, definitely below the 60 barrel a mark. I think below 50 would be what it would really take to see US dollar yen slam support. Those are two key things that would have to happen. The other thing would be where we see an explosion of great numbers for the Japanese economy, with an implosion and record racing unemployment numbers again, like we saw back during the pandemic, beginning of the pandemic. So these are the things, like these factors, like you're starting to really go for a stretch. Those are fundamentals that would drive the technicals in that situation, and right now we just don't see any of those variables happening. So it's a long-term digestion, what we've had this summer. I would say right now we're wedging and get ready for the breakout. We get above 110.43 in the next couple sessions, we'll be knocking at 110.79's back door right away. Then if we get above that, we'll look at this. We have this summer high to check to flirt with. And if we flirt with that one, well, obviously we know that the bulls are driving the trend. And to jump in front of that freight train, well, I guess selling into new highs isn't always the worst thing to do, but I would wait for a sell signal before you try to fade this little bull. All right, another reason to start looking at this in this fashion is look at the Australian dollar, US dollar. Been a major bear for a while, even during the summertime. We came off with a nice high probable Japanese candlestick buy signal right here. Remember we mentioned that book at the beginning of the webinar, High Probable Japanese Candlestick Patterns? All right, there's that. And by the way, let me go to, sorry, I'm just pulling something up so I can share with you guys. Oops. Trying to get a link for you guys. Give me 1 second. All right. All right. For those of you that are on YouTube right now, I am sending you a link. There you go. I just sent it out to you guys on YouTube, and I'll do the same on Twitch right now. Okay, there you go. So on YouTube and Twitch, I just sent you a link for High Probable Japanese Candlestick Patterns, available on Amazon.com. So anyhow, this buy signal came into its targets already back last week. We've already exceeded them. And if you look at the trading from the past two sessions, we've come off the high from Friday. This is your key level, breakout level, above 74.77. This campaign is neutral, not bullish, because it just puts us into the range we've been in all summer, and it has been trending lower like crazy for a while now. Remember, to start it back in February, if you go on an extended trend line here, as far as where is resistance, where does it lie? Well, you can see where that is. So here is the upper boundary. Should we get above this 74.77 area, pressuring new move highs, the downward sloping resistance line for the main trend is still right around this area. I see that capping any upside move. I also don't believe it's going to get up there anytime soon. I think most likely we're going to see a test of support over the next few sessions, if not the next few weeks. And I would be very, very mindful of this level here. This swing low here that became our higher move low right here at 72.21. watch out for this area. If we fall below here, besides confirming that we're back in the bear trend, we could bring this. The Australian dollar, US dollar has the potential to drop another probably upwards of 10 handles over the next 2 months. With the lockdowns that are going on, and for those of you, this is not a conspiracy theory, it's not my point of view, this is just what is actually in the news and what's coming out of Australia. These lockdowns are no joke, and it's a country that's very spread out. It has a strong population, but it's a continent. I mean, it's a country and a continent. They're very spread out. The resources are spread out. Their systems of maintaining operations for things are running on a shoestring, and there's a lot of tension going on there as well. So, and it doesn't look like any of this is going to come to a nice end anytime soon. So with that being said, it's hard for the Australian dollar to see a bounce. I think this is just a short-term profit-taking thing. Because it's been trending so long through the summer, remember we were coming towards the end of the month in August, and guess what? I think a lot of investment fund managers are starting to go on to the sidelines to begin with, because they've had good numbers going into the first 2 months. If they've been riding the trends, now is the time to get out and wait until September 31st, or excuse me, September 30th before getting back into the markets, just for their own numbers. So that would probably exhaust where this rally is here. I would be very leery that you're going to see a lot of speculative trading going on. I think you're most likely going to see a lot more selling pressure coming into the market to set the tone for a longer term trend lower. All right, New Zealand dollar, US dollar is in a very similar situation as the Aussie dollar is as well. This market here, however, has had a nice strong rally. It doesn't have quite the issues that China does, or excuse me, Australia does, because it's not reliant on China for all of its trade for the most part. So this gives this one a little bit more credence to being not necessarily a major bear, but a neutral to bearish currency, meaning that we've had this nice uptick here, nice corrective higher. We had a really good long run. I mean, there was only one lower day in 2.5, 3 weeks. Now it's time to come back on support. We could trade in this neutral area from 71.73 back down near these lows for the next 3 months. Australian dollar, US dollar could fall through the floor and just keep on breaking and breaking. I would be leery of this one being such a huge bear. Now, if the dollar becomes a monstrous bull, obviously we see this thing slamming support, but the dollar is not a monstrous bull right now. So right now we see this market correcting back towards this lower boundary of support, where we don't have any signals to go off of except for the fact that this buy signal here, which was another high probable Japanese candlestick pattern, we hit our targets. We're waiting for a sell signal. Overall, we're bearish the trend here. I would say that you have a low risk sell against 71.73. Anything above here, it's going to be a choppy grind higher. And as far as a slide, I would expect no matter what for us to come down to the 70.5 to 70 even area before you start to see any real true buying pressure come in to hopefully support up the market for those of you that are bulls. US dollar Canada, we're coming off a low from Friday. The question is, do we have a head and shoulders forming, or are we getting ready to resume this uptrend that I have viewed as a correction from back here in the beginning of the summer until the end of August? Overall, this market's been in a slam and bear trend for over a year and a half. If this is or was just a correction and this is the head, we are coming into an area where we'll probably run out of gas and then start to see this market tank. No matter whether the US dollar is strong or weak, odds are this is not going to stay a very, very strong market. Let's see, do any of you guys on the chat room have any ideas about this or care about the US dollar Canada? I know some of you in the past have, so I don't want to brush through things unless there's some questions here first to answer, because I know some of you guys always like to, I don't know, there's a lot of interest in the US dollar Canada. So, doesn't seem like we have any right now though. So, okay, that's not a big deal. Not a big deal at all. All right. So we have this done. Okay, push that out. And all right, sorry folks, just pushing this out on Twitch to one of our questions here in the private chat. Okay, all right guys, that's good. So all right, we have the US dollar Canada rallying up right now today. Odds are it's going to run out of gas around this $120.28 area and then come back either for a sideways trade or the way we're looking for is a failure from $1.2492. If we come through here, that would take out this neckline, that would confirm a head and shoulders, and that would set us up to get back down to this 122 to 121 area. Remember, this market has been in a slide. It's going all the way back and back and back and back and back and back. See, here we're going all the way back to 2020. Here's March of 2020. That's how long we've been breaking. Okay, so this market, no matter what, is a long-term bear. It's a medium-term bear. Short-term, it's been in a correction for the past month, 2 months. It's fallen off of that. Let's see what happens, especially with the geopolitical tensions going on between the two countries, the U.S. and Canada. I don't see any relief here either. So most likely we'll see a continuation towards that trend lower. All right, now let's get to the cryptocurrencies. Got a lot of action going on in the Bitcoin area today. Look at this, falling off of these recent multi-month highs, multi-week highs. We came through, we made a higher move high, and we poked through and made lower move lows. We took out this line, which I had in earlier today on this chart, ironically. Spiked through it. We took out this one here. That's another one. So we took out two swing highs, or higher swing lows, just in today's trading after making a higher move high. At the very least, sets us up for neutral trading. Here's the main support line holding up the trend. You can see here is like a neckline. If this is a shoulder, or if this is a shoulder here and this is a head forming, or if that's formed today, we should see a little chop, 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 stay below these little support lines here and then fall back on support. Is that going to happen? I don't know, but we got a lot of action. You had a 20% correction today in the Bitcoin market. So let's see, ETH USD, here's another one falling off the map. This hit our target value. We were looking for a good value between 4,000 and 4,200. I like it trading down around 24 to 2,600, 3,000 area as a sustainable range as far as for value. So I think that this is another one that's proven that it's a little bit overdone. Now this one only took out this swing low here, a higher swing low here. It did not take out this one. I see more of a support base in Ethereum from this 2,500 to 3,500 area than I do of Bitcoin around 50,000 right now. Especially because I think you have a high demand for U.S. dollars. That as these crypto currencies hit buffer these areas, you have enough selling pressure from those that are involved in it to take profits. Not that the longer term, outlook isn't very bullish. I would say that it probably is, but markets do not just go straight up, folks. So we'll have to see how today's trading ends up because it is very, very volatile today. XMR USD, very interesting. This did not come off a higher move high. This established a high back at the end, towards the end of August, as these other ones have been rallying into the last 3 days. This one didn't. It made a higher move low. It set a lower move high yesterday, and then boom, it's made a lower move low. So this one, unlike the other ones which are coming off a higher move high and making a lower move low, this one is coming off a lower move high and then a lower move low. So I would say that Monero is helping to set a good trend right now lower for profit taking. Does that mean that we're going to be bearish overall? Absolutely not. I like Monero from a value of 220 up to about 450, but this one's a much more stable and highly used technology. I believe that it's because of its store of value is there and the technology is sound that you can see good value when you are between 240 and 300, 320. Once you get above towards this 320 to 350 area, you're running out of gas. You're most likely going to have profit taking. It becomes a costly technology to use. As it comes down and gets in these lower areas, then it becomes more embraceable once again. So this is a nice comfort zone. And as far as value, I would not get shaken up too much on this. Although I think if you're looking to buy into it, I would wait for another dip down around this 220, 240 area. Very solid area to be buying into. Like I said, I think the good floor value for this is around 300, a little bit above where it's trading right now. That would be probably the good gravitation line. Anything above that, I think that's when you take profits, and then you try and when it dips below it, try and nibble your way back into this position. Let's look at the Doge USD. All right, we got the Doge here. This one here is doing the same thing as Monero. It made a lower move high and has made a lower move low today as well. This one got all the way down to, look at that, 21 cents. It was just at 36 cents just a few weeks ago. This one is the one that definitely is the pump and dump one. You can see from this volatility that it is very much more like Bitcoin as far as the volatility on the day. However, this one is not as liquid as Bitcoin, nor as strong as that one as far as the technology and stuff. So it'll be very interesting to see how this one churns. It bounced back in this 50% mark. I think that's just because it was an overzealous sale because of how this market tends to move. But it's also showing you once again that this 30 cents to 35 cents that seemed to before be that support level where everyone wanted to drop in, it seems like 30 to 35 cents is now where people are definitely taking profit off of lower from other positions, whether they are higher, saying thank God I can get out a little bit, get some of my money back, or there are ones that have been buying in the upper teens and the lower 20-cent area saying, yeah, 30 cents is about as good as I can get out of this thing and I got to take the money and run. That is the scenario I think that is going on in that situation. All right, Euro US dollar, let's go back to where we started. As you can see, this market is pretty much where we were at. We're heading into the lunchtime trade. We'll see how the market settled today. Remember that we are in a holiday week. Holiday weeks are always thin and choppy. Yes, we are back to work today on Tuesday, but that doesn't mean that everybody else is. So, and we are coming into the last month of the quarter. Unemployment, it was a big disappointment. Watch out for the oil numbers tomorrow and watch out for the unemployment claims on Thursday, because most likely we will see a big swinging action come into that area. So somewhere between 9:30 tomorrow morning and 7:30 Chicago time on Thursday morning, you will see some erratic movements in the currency markets, and most likely I think you're going to see a reinforcement of trends. I would be very cautious being a dollar bear except in certain currency crosses, and get ready for some big moves. We'll end up on one last thing I want to show you. This will be the indicator for you to watch as well. So when you're at the Forex-trading-unlock.com website, if you go to the futures link, when you go to markets here, you go to the futures tab, pull up that page, come down, you can see the 30-year and the 10-year notes. We're going to take a look at the 30-year real quick. So this is a big deal to watch because interest rates are what drive part of a function of currency pricing. Now, here's what I want you to see. September 3rd, that was Friday, okay? Bonds were closed yesterday. We're going to go to the CME website right now and see where we're trading. Now, this is in delay by law. You can't broadcast live quotes of futures. All right, so they're trading down. Now they're trading at 161.30. They're down almost a full buck. Let me show you what that means. This is why I think you're going to have to stay strong, the dollar. 161.30 is right there, okay? This is where this treasury bond market is trading right now. This market is trending lower. When treasury markets are trending lower, interest rates are trading higher. That means the dollar becomes more valuable. So with that being said, the market is telling you, watch the 30-year note, watch the 10-year bonds. They're down a handle today on the first day of trading of the week. That's a big deal. That's follow through from the unemployment number. If we see this market continue to slide, especially into Thursday and Friday's trade, odds are you're going to see the euro coming back down towards this 117.5 area, maybe even 117 area. You will see the dollar be a bull versus most currencies out there. Be mindful of that. It's very important. So that's our end note. And don't forget, check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And always go to Forex Trading Unlocked on YouTube and Twitch for your foreign currency and cryptocurrency information. And check out our website, www.forex-trading-unlocked.com. You have a great day. We'll see you later. And we'll have another stream up with a couple signals